Hey everyone, welcome back to the channel. So in this video, I want to just discuss the HEX price from an overall market in review style video because we do have a sort of battle of the bears versus bulls recently. We've been in an uptrend, right? Long-term uptrend, but we've seen some bearish things and bearish comments pointing out things like obviously the divergence that we can't ignore, which already led to a 35% dip or so. So definitely holding strong against the rest of crypto like you saw in yesterday's video. But overall, there are still signs that get people wondering, and here I am to give you just the data, right? Just the data. So if you like this kind of hybrid approach to the HEX charts, both quantitative and technical, definitely leave a thumbs up. Be subscribed by now or by the end of the video. If you aren't already, let's chat a little bit about what we see in the charts. So we've been talking about this 20-day MA, 21-day EMA, for a while now, saying, you know what, once we're holding it as support, it's generally a good sign. Once we break it as resistance, it can be indicative of a slight few weeks of either reaccumulation or small downtrend, which you can tell this was like, just 20% or so beneath. And we illustrated our downside risk yesterday using data from this year, right? Using data from, I believe it was over here, and over here, where we saw anywhere from about a 20 to 30% dip if we were to break these moving averages. So if we take a look at where we are now, we actually still haven't closed full candles beneath it, which I'll continue to argue for that requirement before I actually say, okay, it's a higher likelihood that we see something like this, right? And so we actually haven't broken it, right? We see the body of the candle break through it. I guess we did break it, but we haven't closed fully beneath it, is what I'm trying to say here, is that the 21 EMA is at around 774, and we opened yesterday at around 781. So now, in my opinion, we wait and see what happens during tomorrow's candle, right? Because this candle will be closing in about 4 hours or so from the time of filming this video. But even if it closes literally anywhere it closes, right? Anywhere it closes, even if it's down here or up here, whatever it be, the full body of the candle will not have closed beneath this 21-day EMA. It's impossible until potentially tomorrow, right? So we'll have to wait and see another 28 hours or so, and that's when we'll get a clearer picture, in my opinion. Could we have a fake out? Of course, where we have like just one candle print beneath it and then it's just take off, right? None of this is financial advice. None of this is set in stone. So take everything I say with a grain of salt. I'm just looking at historical data, okay? Your generic disclaimer here for this video. But that's all I'm really trying to get at is if tomorrow we see a candle open and close, so print a full body beneath the 774 level or whatever that EMA level is after the close today, then I'll say, okay, maybe we see a slight 20% retracement or so before continuing on. Which, what would that look like? Well, maybe something like this. These levels are significant in the sense that they're at the top of the wicks over here, top of the candles over here during this local top at the beginning of this bullish formation. And this is overall bullish in my opinion. I've said this many times that price breakout is the exciting part, but price confirmation on key levels is arguably even more important because you're essentially retesting resistance levels as support, which it's just powerful, right? It's the simplest form of TA you can imagine. No moving averages, nothing fancy, no indicators, just support and resistance, horizontal levels, which clearly 6.4 pennies is one, right? And we've talked about the fact that, if you subscribe to the idea that this was rather a falling wedge than an ascending triangle, just by looking at candles, then you could argue, well, we need to test the top of the falling wedge, right? That could be an argument. And yeah, I'm just giving you bears something to work with, so you actually have an argument, right? This is the bearish case, and you don't see me do this often on the channel, but I like to keep it real and let you guys know that there always is downside risk. I make that very clear across these videos. And you could also argue for the bullishness of something like this, because what are you expecting to happen after you have strong support in these regions if we were to reach them you know, big if, because again, these wicks could have already been the bottom. So like, what do you expect after this? Well, after you test previous resistance and hold it as support, generally that's a fantastic sign. It's generally a sign that, hey, we formed market structure so we can continue on. This isn't a bubble. This is a healthy market where people buy, people take profits. People buy, people take profits. And that's just like any of these red candles, you have to remember that's someone taking profits. It's someone using the coin for what it more or less is meant to be used for appreciation purposes. And then, you know, maybe they come back in later. And if it's at a higher price, well, that's better for everyone else. Right? And if they come in at a lower price, well, that's better for them. So, I personally don't see this as FUD. If you're going to comment like, oh my gosh, you're bearish now, like, this isn't a bear market, but like, I don't know, the comments can be ruthless sometimes, but I'm just here to give you the data. And this looks like a possible scenario, a very possible scenario. And if we were to test these regions, then I would turn absolutely hyper bullish again. Like, so many scenarios can play out. But without rambling too much on that qualitative, and I do want to point out some of the quantitative stuff. Like, here's a good one. We've been talking about this fractal for a long time on the channel, yet I sort of usually glance over one specific point, and I don't think I've even touched on it, to be completely frank. And that's during this consolidation region between the orange and the yellow. If you're not familiar with the regression rainbow, then go to LookIntoHex.com. It explains it all at the very top of any given chart page. And more or less, right, if you already understand, then awesome. Let's continue on. If not, please go check that out first so you understand fully. But something I haven't touched on much or at all on this channel is during this consolidation period, we tested the orange level twice. Right? We had 2 dips down the orange. And so far, if this were a fractal, that'd be playing out similarly, right? Not identically, but similarly. We might expect a retest of orange a second time, just like we did over here, because we've only tested it once here. And so what would that look like? Well, all you have to do is look at the regression rainbow, hover above, you know, orange. What does that say? 6.2 cents in, you know, tomorrow. So the orange curve is about 6.2 cents tomorrow and approaches the 5 penny region by the end of the month. So we've talked about how that level is significant. And if we were to reach it again with a full close, right, an actual candle body reaching it, because these were just wicks, then it would correspond to having tested the orange level for a second time. And then you saw what happened after that was the final dip, more or less, before coming up pretty much the yellow, back to the middle, and then onwards. So what would that look like if we did that on our price chart? Well, it would correspond to, once again, 6 pennies or so, 6.4 pennies, back to the yellow, which would correspond to around 10 pennies or so early July. And then halfway through would probably be something like 8.5, 9 pennies before blasting off. So again, it's probably not going to play out exactly like that. But if we were to follow a similar pattern to this fractal back here, then we would retest the orange a second time, which once again corresponds to about 6.3 pennies right now and is constantly moving up and will only be printed on these charts if it's an actual candle close, right? Hourly wicks don't count, 4-hourly wicks don't count. It's only daily closes that count on this data, okay? So that's that. Glad I pointed that out. If we look at our extension from fit risk metric on our heat maps here on LookIntoHex.com, then you see that just another angle of the same fractal, right? Where something that jumped out to me looking at it via this angle is that if you look at just sort of the bullish formation after coming up from the 0 level and then having a bullish formation, if you look at how long it took back here, it took from, let's say, day 85 to day 126 or so. You could argue for day 92, right? That's where it actually started. Let's say day 92 to once we broke it around day 126. So that's like 34 days. It's not long over the course of which we formed this. How long did it take to form this current bullish formation? Well, it started on day 504 or so, and we're on day 559, meaning it's been about 55 days. So if this one took 34 and this one's taking 55, it's taking longer, right? And you can see it almost more spread out, and it looks almost less volatile because you see these huge spikes to the upside, downside, just almost this chop over here, where over here it looks way more, I guess, elegant, way more thought out, drawn out. It just looks healthier, if that makes sense. And it's oscillating around the same region, around this 0.1 region. And once again, this corresponds to our regression rainbow heat map, our extension from our fit. This is just a color-coded version of it. But it makes sense, right? This would correspond to something like this over here. So you have your bearish case, right, which is a downside risk of, what would that be? Like 20% max. It's really not much. It's really not much. And if you look at your upside potential, we've talked about this, it's absolutely massive, right? Absolutely massive if we're to continue to these upper lines that we've been talking about for this fractal, right? So just wanted to point that out here in this video, that sure, there's always downside risk, but also keep in mind the other side of the coin, which is there's upside potential. So no such thing as risk-free profit in any market, right? And just to finish off a little bit with some quarterly ROI updates, because the month is coming to a close very, very soon. I think we only have like, what, 5-6 days left in June. And so our quarterly chart will close. Effectively, we'll have our updated ROI from day 1 of this quarter, Q2 2021, to the end of it. And again, we've seen that every single quarter has been profitable. If you'd use the simple strategy of buying at the beginning of a quarter, selling at the end of a quarter. We have entire videos on this. I'll leave a link here so you can check that out if you haven't yet. It explains the importance of this for entities like institutions, businesses, and so on, where they go by a quarterly framework. So it has some significance, in my opinion, and we are about to close it in about 5 or 6 days, and we'll see where we close relative to all other quarters and our average quarter as well, where our average quarter is a nice 3.47x from day 1 of that quarter, and we're actually above average right now at about 4.6x. We used to be the second most profitable quarter from, day 64 to 81 of this quarter. So like the beginning of June, we were setting up to be the second most profitable quarter to date. And we dipped slightly beneath this third quarter, we dipped slightly beneath this red curve, which is Q1 2020, to become the third most profitable quarter to date. So we'll see where this closes. I think it'll be interesting to see if we close right above, right beneath this red curve. If we blasted right through this orange curve, that'd be insane. If we came back down to our average quarter, it wouldn't be a surprise. So we'll see. I think it'll be fun to keep you updated on this. Again, this closes in about 5 or 6 days or so. Just another chart I wanted to show you. Like, there are so many different angles you can look at things, but overall, this one was more so to elucidate on the downside risk. Like this one, more of the bearish case, where hey, if we're to repeat what we have in the past, coming back down to these regions, as you've seen, they've been incredible buying opportunities. Once we come back in between these curves or even beneath them, right? Great buying opportunity between the curves, great buying opportunity beneath them. These are just the 50 and the 100-day exponential moving averages, by the way, right? And we've touched on these whenever things get a little bearish, explaining how at, in between, or beneath the set of curves has been historically fantastic times to buy. This one was about 3 months apart. This one was about, these regions were about, another 3 months apart, another 3 months apart. Then they started getting a little closer, right? More so like 2 months apart. And how long has it been since we've seen something like this? About 2 months. So it wouldn't surprise me if we saw price action do something like this, come back down to these bands, and keep in mind that these will be increasing over time as long as price keeps printing candles above it. So something like that, maybe we bounce off it, come back into it, form a little consolidation, and then continue higher. So I wouldn't be surprised to see a little cool down, especially because we've run up like I mean, come on guys, we've run up like 6 or 7x in literally less than 2 months. So you guys get spoiled really quickly. We can't have all-time highs every single day. Okay, get that through your skull. It's exciting when we have them. Price confirmation, arguably even more important. Market structure, arguably even more important, so we can have a healthy market and be able to better see the path to these higher levels, right? So overall, I guess you could say short term, slightly bearish, medium term, neutral to actually bullish, and longer term, actually pretty fucking bullish. So that's my take on things. Let me know what you guys think in the comments below. I'm pretty sure we covered most things. Actually, let's go ahead and finish off with this HEX BTC pair and something I want to show you guys on Twitter actually. So the HEX BTC pair, we mentioned this a few videos ago, where ever since late April, we saw our nice move up, nice consolidation to, actually, I wasn't looking at these. I was looking at this, correct. This moving average channel on the daily chart. So we saw, again, we saw nice move up, nice consolidation. And then coming into this channel, we saw a nice bounce and then a retracement to test previous highs, as well as come back into our channel. So you could call this convergence of support, right? Horizontal support and moving average channel support. And then what happened after that? Pretty much the exact same thing, or so it looks like, where we had a pretty explosive, you could argue impulsive move up, consolidation, back to the channel, wicked almost right down to it. You could argue it's similar to this. And then we had a nice little pump that came back down to test not only previous all-time highs, but the moving average channel. So it's, again, it's testing recent all-time highs on this from back here, as well as coming back into our channel. So this is actually the first candle that's closing inside of the channel. So maybe something you want to keep in mind is if we close beneath, what is this? I think it's like 232 sats, and we're currently at around 228 sats. So close, very close, enough to just be a like a rounding error. It's probably enough to be a rounding error. All I'm saying is we've seen this pattern, and this could keep playing out where we see something like this happen again, where we see another impulsive move up, consolidation into the channel, which will at that point maybe have been moving up. So again, a lot of speculation here, but overall we've been overperforming against Bitcoin a lot, and I wouldn't be surprised if we kept going. Wouldn't be surprised if we saw a slight retracement. I don't know. I don't have a crystal ball, right? I don't have a crystal ball. So last thing I wanted to point out was actually a PulseChain update, which you can see here on @PulseChain.com on Twitter, which is just a cool update on what the UI is maybe going to look like for the sacrifice phase. This gives me the idea that maybe we see it sooner rather than later. But either way, I think it looks cool. I think I like the UI a lot. The purple and pink, very cool. You can connect your wallet. Once that's connected, you select the network, which is pretty much what coin you want to sacrifice. You can see here, it's kind of blurry, but you see Ethereum, Avalanche, Bitcoin, Bcash, Cardano, Ethereum, and so on. And then once there, it says send a sacrifice to this address. It looks like the UI is going to be pretty nice. And this is the UI for wanting to either be a validator or doing delegated proof of stake via these validators. So we'll see. I think it looks good. Go ahead and check them out on Twitter if you haven't already, and follow me as well. We're at 893 followers. Can we get to 1,000? I mean, there are almost 3,000 of you here. So I'd guess we could probably get to 1,000 on Twitter by the end of the day, if you guys really wanted to. I mean, if you want to send it, send it. But yeah, with that said, subscribe if you're new. We're almost at 2,900 subscribers. Let's get to 3,000 by the end of the month. Appreciate you for watching. And let me know what your thoughts are in the comments below. Are you erring more towards this bearish scenario, right? These bearish cases? Are you erring more towards these bullish cases where things can get very heated very, very quickly? And yeah, let me know what you think. Leave a like, subscribe. I'll catch you in the next video. Peace.